Hello all, this is David Rodriguez, quantitative strategist for dailyeffects.com, here from an absolutely frigid New York. So what you might recognize is normally our view of Governor's Island back there is now a solid sheet of ice. Thank negative temperatures for that, but on to more important topics. We're here to talk about the Japanese yen, which I've been talking about ad nauseum in the past couple of weeks for good reason, because the Japanese yen went from worst to first. And what was the worst performer in Q4 is now the best performer year to date, or at least it's traded around a bit with the Australian dollar and what have you. But the reason I'm focusing on the yen is simple, because I think it's at a potentially significant turning point, which is also something that my colleague Christian Kerr wrote about this morning, that the yen is at potentially substantial support. If you read reminiscences of a stock operator, there was a gadfly who always said the same thing. Well, we're in a bull market, you know. The dollar yen is still in a bull market. But, and that's an important but, you know, 103.50, 103.70 or so was major resistance and major support on a couple of occasions. And remember what we've been talking about the past couple of weeks. Recent positioning data, recent futures positioning data showed that large speculators were their most short the Japanese yen on record, and by far. Short Japanese yen means long dollar yen. So what does that mean? Again, as a brief reminder, no one wants to be the last one holding that short position. So the second that you see the Japanese yen break through significant resistance, or the dollar yen break below significant support, is the second, I think, you see significant short covering and an acceleration of that rally. But that's a big if. You know, what do we watch in the meantime? Well, talking about it a lot, the S&P 500 has been a great barometer of sorts for the dollar yen just because it is suddenly correlated to risk that much more. You know, once that panic sets in, it could be brutal, but that's a big if. So we're going to see what happens in stocks as well as the S&P 500 volatility index, aka the fear index, aka the VIX, as well as the Nikkei 225, obviously, because that's been the classic correlation that has held up quite well, especially in 2013. So take a look at the charts below. One thing definitely worth mentioning is a big shift in retail FX positioning, especially in the Japanese yen against the euro, or the euro-yen currency pair. We've suddenly seen long interest grow to its highest since the euro-yen bottomed near 119.10 in April of last year, and that could be potentially significant. We're in a bull market, you know. The Japanese yen is still in a downtrend, so I'm not ready to call it quits just yet, and in fact, it was just 2 weeks ago that I wrote the dollar yen long position is my favorite trade of 2014. I'm not necessarily convinced that that's no longer the case, but again, the key here is that we could be in for a much deeper correction, which as a long-term dollar yen bull is actually not the worst thing in the world. It means that we could get a better price. So let's see what happens next. Best of luck trading. Let me know what you think. Take a look at the report below, and I'll talk to you soon. Take care.